What is good, everyone? So in today's video, I'm going to be going over the exact candle that makes me over $10,000 a month consistently in trading, how you can do the same thing, right? I'm not going to gatekeep any information like the typical demo guru does, right? I'm going to share everything about it, how to do it, where to do it, when to do it, and all that good stuff. So stick around, watch the entire video, and let's get into it. So here we are on the chart now, right? And this is basically the candle, but it's not that easy, right? You can't just see this and then take a buy or sell, right? But you need to understand where it happens, how it happens, and how it works, right? I've also drawn on the 30-minute, right? 30-minute bullish, 15-minute bullish, 15 bearish, and 30-minute bearish, right? Because every single time frame tells its own story. It has its own story behind it, right? And you have to understand why it works like that, right? So here on the 50-minute, well, let's actually start off from the beginning, right? So I don't get confused here, right? In trading, there's only three phases, okay? There's only three phases the market can be in, and it can be in only one of these phases at a time, okay? There is the continuation phase, then there's the consolidation phase, and then there's the liquidity phase, and then it repeats itself, right? Continuation, consolidation, and liquidity, and then obviously just repeats itself, right? And when something is repeatable in trading, you can make quite good money off it because you can anticipate it and pre-plan it and then execute on it, right? So what is the continuation phase, the first phase, right? That's basically just the entire push. That's basically the first push of the move, right? That's the higher time frame trend. So in this case, this right here is the continuation, right? Let's actually draw it in circles right here. Continuation, right? Now, what is the wait? Let's actually draw it on all time frames here, so it doesn't get confusing, right? Right there. That's the overall bullish trend up here, overall bearish trend right here. Now, whenever price is moving sideways, that's when we enter phase 2, which is the consolidation phase, right? So consolidation. So first of all, continuation. Second of all, consolidation. Consolidation just means price is moving sideways. There's no clear direction, right? Price is just moving sideways, and whenever price is moving sideways, it is also generating liquidity, right? So it is generating liquidity above these previous highs and below these lows down here, right? Because liquidity equals stop losses. Let's actually draw this down, right? Liquidity equals stop losses, and stop losses equals money, right? Money from retail traders and institutions, and then it's just a repeatable cycle again, right? So liquidity is literally just stop losses, right? And price wants to hunt the stop loss because they want to make money, right? Whenever you make money, the market loses money. Whenever you lose money, the market makes money. And obviously, since 99% of traders are unprofitable, well, the market makes quite good money, right? It hunts out everyone, hunts out all the stop losses, and stop losses, it is at below or above previous highs, or at equal highs and equal lows. So there's two forms, right? Above or below previous highs and lows, and at equal highs and equal lows, right? But whenever price is moving sideways like this in the phase 2, right, consolidation phase, as I said, it's generating buy side liquidity above these previous highs up here. So that's money, that's liquidity, that's stop losses, right? And it's generating sell side liquidity down here, right? That's also stop losses and money. And obviously, before price is going to shoot directly up, right, it is most likely going to hunt liquidity first, stop out everyone, manipulate everyone, and then it's going to follow that overall bullish trend, right? Or overall higher time frame trend, which in this case was bullish, right? So if we go to the chart here, this right here is the consolidation phase. Let me actually draw down in orange right here. This is the consolidation phase, right? So first of all, we had the continuation. Now we have the consolidation. Let's actually go do something like this, so it's very clear, right? So everyone understands this, right? And now, why I've drawn out the 15-minute versus the, also the 30-minute is basically because on the 30-minute, you can't see the consolidation because it's just one candle. And on the 15-minute, you can obviously do it. It's the same exact price action, right? These two candles, these two, this two, market, whatever you want to call it, right? It's the exact same price action, right? Exact same price action. You can see open up right here, open up here, right? Close down here, right? And then liquidity grab, and then, you kind of get the idea, right? Closes up here, It's the exact same price action, right? So on the 15-minute, there is consolidation, but on the higher time frame, so the 30-minute, there's just nothing. It's just a candle, right? But you have to understand that a wick on the lower time frame or a wick on the higher time frame is just candle closures on the lower time frame, right? So we have to understand this and make every single candle, like every single candle on each time frame, make its own story, so we can utilize that and take advantage of that story, right? And take advantage of price action that way. But anyways, that is the consolidation phase, right? So the second C. Now we enter the liquidity phase, right? So as I said, there can only be three phases, and the market can only be in one of these three phases at a time. Now, liquidity is basically just whenever price hunts everyone, like hunts all the stop losses, hunts all the liquidity, hunts all the money, right? Happens on, basically a day-to-day basis, right? And this is what we want to take advantage of. We don't want to predict this. We don't want to try and predict this and take some sniper entries down here. No, we want to pre-plan it. We want to pre-plan where the liquidity grab is going to happen at, and it's most likely going to follow the overall direction, and it's at below previous low. So we know that there's a liquidity, there's resting stop losses down here and resting stop losses down here. So we know that liquidity grab is going to be somewhere in this range, right? And then after the liquidity grab, so post liquidity grab, we take advantage of that continuation, right? Because the continuation comes post liquidity grab, right? CCL starts repeating itself. Continuation, consolidation, liquidity, and then continuation, consolidation, liquidity, continuation, consolidation. You get the idea, right? It's just a repeatable cycle. And as I said, when something is repeatable, you can make a lot of money. You can become profitable with it. And that's basically what makes me $10,000 a month. But there's a lot to this, and we'll go over it as well. I also draw out the price action, then go over some live trading examples, and it's going to be good. So just keep watching here. Now, this is the continuation on the bearish 15-minute time frame and on the 30-minute bearish time frame right here. Now, that's the three phases, right? Now, as I said, I've drawn out the 30-minute versus the 15-minute so you can get an understanding of, the consolidation on the lower time frames, right? But you also have to understand that this is, theoretical. This is pretty clean. Like, this couldn't be any more clean, right? Obviously, during live trading conditions, it's going to be more choppy or like quote unquote harder to read, if that makes sense. Not hard, but it's harder to read than this, right? Because it's theoretical. But let me just draw it out. So in a bullish example, it is most likely going to be looking something like this, right? We start down here, right? Obviously, because this is the low, right? Start here, push up, and then we push down here, and then it's kind of moving sideways right here. This is the consolidation phase. So first of all, continuation. Second of all, consolidation, where price is moving sideways, is generating buy side liquidity and sell side liquidity, right? Liquidity equals stop losses equals money, right? And then it's probably going to reject that level, right? So trap out everyone, so everyone gets in buys right here, because the theoretical way of trading is just a break and retest. Wait, let me just actually do this first, okay? You guys can get an understanding of this. This is what everyone sees. This is what most retail traders see, right? But most traders are also unprofitable. So if 99% of traders are trading this way, break and retest, right? Like a normal break and retest, like something like this, right? Let's say that this is the significant level right here. Break, retracement to that level, rejection, everyone gets in sells right here, right? Like most retail traders literally do this, right? You've probably been taught that way as well. I had as well when I started out trading, right? Most retail traders get into sell positions right there. But you have to think of it like this. If 99% of traders are trading this way and 99% of traders are unprofitable, there's something wrong here. Like, can you do the math here, right? So if everyone is getting into sell positions right there, because this is the most NPC way to trade, like no hate, right? But it's the most NPC way to trade because everyone trades this way, right? If everyone gets in sells right here, realistically, think to yourself, is the market going to push down and everyone makes money, everyone hits their take profit, and the market loses money? No, the market is obviously going to stop out everyone, liquidate them basically, stop out, manipulate, stop hunt, whatever you want to call it, and then it's going to move in that overall bearish direction post liquidity grab. So do you see that, right? So if everyone has their stops up here, is the market going to just push down to everyone's favor? No, it's going to push up first, stop out everyone, and then it's going to push down, okay? So just to draw it out here, this is the consolidation phase here, right? Wait, can you guys see that? Hear the bus in the background? That's some weird ass shit. But whatever. There's the continuation phase. Then this is the consolidation phase. And you realize now with this information that I'm giving you, right, that there's stop losses up here, right? When there's stop losses up there, there's money up there. When there's money up there, there's liquidity up there. And price wants to hunt this liquidity, wants to hunt this money. So there's stop losses from retail traders right there, right? And you simply just wait for rejection, wait for everyone to get in, and then wait for everyone to get stopped out and then enter, okay? So if 99% of traders are unprofitable, your job here is just to do what the top 1% is doing differently compared to the other 99% of traders. You want to be in that top 1%, and the top 1% is waiting for the 99% of traders to get liquidated, stop hunted, manipulated, and then take advantage of that move post liquidity grab, right? So to go over the three phases again, this is the continuation first, consolidation, right? Consolidation, and then the third phase, liquidity, right? So we wait for the liquidity grab, and then post liquidity grab, we take advantage of that continuation again, right? So CCL, CCL, CCL forever, right? That's basically how to do it, but that's in more of a realistic way of doing it, right? But I'll also go over some live trading example and some chart examples here in a minute, but just keep watching here. And in a bullish example, We start off with the continuation phase, right? Then obviously price is moving sideways, generating buy side liquidity above these previous highs, sell side liquidity below these previous lows, right? Trapping everyone in. So it starts rejecting here, right? Wait, that was my mistake. Wait, let's actually do it like this. Starts trapping everyone in. Why can't I move this? That's annoying. Traps everyone in right here, right? Because it starts rejecting this level because everyone's trading this way, but everyone is also, or most people is also unprofitable, right? So traps everyone in. Everyone has their stop loss below the previous lows because there's two forms of liquidity, right? Below or above previous highs and lows. So above previous highs, below previous lows, and equal highs and equal lows, right? And if everyone has their stops down here and take profit up here, well, is the market going to shoot up? Well, no, it's not. It's not going to do something like this because then everyone makes money and the market loses money. It is going to push down, right? It typically also happens at a market open. So London Open, New York Open, NYSE Open, we'll get into that as well in the timing of it. But it pushes down, liquidates everyone, right? And then starts rejecting that level post liquidity grab. So you don't enter here pre-liquidity grab. No, because if you enter pre-liquidity grab, if you enter without a liquidity grab, you become the liquidity yourself, right? You need to wait for everyone to get stopped out and then take advantage of that move post liquidity grab. So your entry is not here. No, your entry is simply right here after the liquidity grab, right? And then you place your stop loss below the liquidity grab. I'm mumbling here. You place your stop loss below the liquidity grab, you enter post liquidity grab, and you target some kind of buy side liquidity, like above previous highs or at some kind of significant level, right? Vice versa. You don't enter sell positions right here with your stops up here. No, you wait for everyone to get liquidated and then you enter right there, stop loss up here, and you target some kind of lower low or equal lows or previous lows or significant level, right? But that's basically everything drawn out here. Now, here comes the fun stuff because this is, easy for me to explain, but you also have to know how it happens, how it works in live market conditions, and how you can take advantage of it to make $10,000 a month consistently, right? Now, I'm going to be going over some live trading examples of me using this, of me making multiple thousands of dollars, and yeah, so you guys can see and understand how it basically works in live conditions and how I pre-plan the liquidity grab before it even happens, how I pre-plan the levels where the liquidity grab is going to happen at, so I know what to look for and I know what to do if price does X or Y, right? So I don't get FOMO, right? How to eliminate FOMO, that's another topic for another video, but basically just pre-plan your analysis. Because if I'm waiting for something, if I'm waiting for the price to go down here, right, liquidate everyone, and then I know that I'm going to take advantage of this move before it even happens, right? I know what to do if price does that. And if it just shoots up here, let's just say that theoretical way, like, price just shoots directly up, well, I don't take a trade. That's basically how to eliminate FOMO, but that's another topic for another video, right? But basically, let's get into some live trading examples and some chart examples of me using this, right? So yeah, let's just get into that and let's hop over there. So I've just pulled up a live trading example here and let me listen to this. Yeah, so market open, let me see, and yeah, let's see, do I even pre-plan this? I think I do, right? So I essentially just want this 4 hour to end up flipping bearish, and with that liquidity grab to the upside, liquidating these highs, right? Then comes a liquidity grab, and we can then take advantage of the move going down. Yeah, so do you see how I'm anticipating the market does its thing, grabs liquidity at market open, and this is 50 seconds in market open, right? So the first move here is the continuation. I think it's more clean here. Yeah, so let's actually delete this. No, because I want to keep this in mind for you guys. Can we make this a bit smaller here? I want to keep this on the screen so it makes more sense. Can you even see the live account here? I don't think you can, but I want to make sure that you can, because I'm not a demo guru and I don't want to get you guys confused. Wait, let me remove this here. Can you see this now? I think you should be able to see it, right? I hope you guys can see the live account. I don't know if you can, but whatever, right? Let's actually go over here. This is the continuation, right? Now, this is the main push. So the main push is bearish. The overall higher time frame bias is bearish, right? Hence, I'm looking for sells. So always easier to take pro trend versus counter trend trades, right? Now, second phase, consolidation phase, right? Here, moving sideways. Whenever price is moving sideways, it's generating buy side liquidity above these previous highs and sell side liquidity down here, because liquidity equals stop losses equals money. Price wants to hunt this money. Now, I've pre-planned this level right here, right, as a significant level because there's previous highs up here. And I'm anticipating, as I said right there, that if we push up here, this now becomes a liquidity grab. And if we start flipping bearish, then we can take advantage of that continuation post liquid grabs. So before the market even happened, and you have to do this as well. Before you show up, or when you show up to the market, before market opens, you have to pre-plan the whole trade before it even happens, so you know exactly what you're looking for. I know exactly what I need to do if price meets my entry criteria, right? I know I need to take sells if it breaks its current low after liquid grab, because I'm anticipating that continuation post liquid grab, right? Now let's delete these, and yeah, let's actually also delete this. I think you get the idea now, right? Let's play price here. Break of the current 4 hour right here. That's all. You can see the live account top left corner. I think you can see it. I think my OBS has moved enough now to see it. But whatever, I just placed my sell stops after liquid grab up here, right? Clean textbook play. And let's see, we get activated right there. No drawdown, and I make over, I don't know, like $1,000 or something. Yeah, just let it run a bit more, and then I end up closing it. So pretty beautiful trade, 2.5K week, and 2.4K, my bad. And let's go over another live trading example. So I hope you get the hang of it now. I hope it starts to make sense. But let's go over another one, which is also a very clean move. But as I said, it happens over and over again, and it happens on all pairs, in all sessions, on all time frames, right? You just have to put the pieces together. I'm giving you all the pieces to the puzzle. Now you just have to do it yourself. You have to, find it on your own. You have to implement it on your own and take advantage of it on your own to make a shit ton of money in trading, right? And it's basically also what got me profitable. And as I said, I'm not gatekeeping any information. I believe in that, all the information should be online for free anyway. So I'm just gonna share everything for you. And if you like that kind of stuff, leave a like. It means the world to me. But whatever. Let's go over another live trading example here of me doing this, so you can get a clear oh, it's windy here in Croatia. Can you guys, I hope this mic doesn't pick up the wind, whatever. Let's go over another live trading example here. I'm yapping. Let's go over there. I'll see you guys in there. All right, so we are now on another live trading example here. Let's move forward here. Do you kind of see the idea now? Do you get the hang of it? So let's actually go back here. Pre-market open. So this is market open, 40 seconds in. Market open, 9:30 a.m. Eastern, right? And look at this red line. I already had pre-planned the level which I was anticipating the liquidity grab is going to be at, right? Because it's at previous highs, right? And I know that the overall trend, overall continuation is bearish. Now I simply just wait for a consolidation, right? Which happens at pre-market open, typically happens at pre-market open. So market open is going to be that liquidity grab. And then post-market open, 15 to 30 minutes after market open, we get that continuation for the directional move for the entire day, right? That's basically textbook how it plays out, right? I know there's a lot of sub factors to this, but that's basically it, right? So continuation here, now consolidation, and then market open. I'm anticipating a liquidity grab is going to be up here above previous highs, right? And then we get that continuation post liquidity grab. That's what I'm anticipating, right? And let's play price here. So as you can see, broke previous highs, tapped this red line perfectly, and I basically just have sell stops on the break of the current low right here, right? And get activated, because this is the exact candle I showed you guys in the beginning. It always is like that. It's just a liquidity grab candle. You can call it whatever you want. If you're trading ICT, and the three phases you might have been referred to as accumulation, distribution, manipulation, or something like that. I just simplified way more than that. I don't believe in anything needs to be advanced. Advanced doesn't mean more profits. It doesn't mean more profitability. Simplicity always beats complexity in trading, but that's also another topic for another video. But basically, you can see right here, the candle here broke these highs right here above previous 1 hour highs, right? Broke all these highs, broke all these highs, broke all the buy side liquidity, right? Overall trend is bearish. So there's the continuation, consolidation, liquidity. Then we get that continuation post liquidity grab. That's what I'm anticipating, right? And let's play price here, basically get activated, blah, 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 and end up making, yeah, I don't know, like 2K, I think. Wait, let's see here. Yeah, wait, let's see here. We're about to get taken out right there. Yeah. So 2.1K in the last 2 weeks or something. And as you can see, obviously live account top left corner. I don't trade demo. I don't flex demo accounts or profits. I don't flex a Rolex. I don't flex rented cars in Dubai or whatever. I don't believe in that stuff. I need to be as educational as possible for you guys, so you can learn it on your own, take advantage of your own, and make consistently $10,000 a month on your own, right? Now, that was a live trade. I just want to make sure that you understand this completely. So we'll go over one more trading example. I will find a bullish example of this in live market conditions, and yeah, show you guys that, and that'll be the last one. And let's get into that. Let me go over there. All right, so here's a bullish example, right? Let's play this. Uh, So 30 seconds before market open, we already grab liquidity pre-market open, which typically doesn't happen. As I said, it happens at market open, but pre-market open, we grab liquidity, and you kind of see the three phases here again. Continuation, right? Consolidation right here. Then we get that liquidity. Now it happened at pre-market open, right? Get that liquidity grab, and then post liquidity grab, we get that continuation. That's what I'm anticipating. That's what I'm going to take advantage of, right? That basically what makes me so much money in trading. That's what got me profitable, and that's basically what makes me consistently over 10K. But anyways, the numbers are pretty irrelevant, right? I mean, you couldn't care less, I guess. But as you can see, it just pushes straight up, post the liquidity grab. I mean, it doesn't get any more simple than this, boys. And I close it out like 1K profit or whatever. Let's play price here. Yeah, like probably close out like 1K. I can't remember it, like 1.1K or something. But whatever, it doesn't matter. Numbers are relevant. But once you understand this, once you understand the three phases, the liquidity, how the candle moves, how it works, right? You can make so much money. Last thing here, I just want to show you guys something, okay? So I'll go over to Google Drive again, and I'll show you guys something for free that you can get access to, no charge or nothing. All right, so last thing here, you can get access to this entire playbook of my entire strategy that, basically got me profitable. As I said, it makes me over 10K a month. And I'm not gatekeeping anything, so you can just download this for free if you want to. Just join my free Discord, it's in there. Don't worry, it's all for free. And basically just copy it, paste it on your own, and you can make a lot of money, become profitable, right? Obviously, there's psychology factors that come into play, and there's some, small things here and there, but you'll get there, right? That's what my YouTube here is for. And if you don't want to, do all this your own, just skip the process and become profitable as fast as humanly possible. Well, I also got a one-on-one mentorship, right? I'll help you go from A to C, consistently unprofitable to consistently profitable, right? So if you want access to that, you can also check the link in the description. Everything is in the description, right? But anyways, if you found the video helpful, if you learned something today, well, leave a like and comment and subscribe, because it means the world to me. And otherwise, boys, have a good one, and I'll catch you in the next video.